Thanks for joining David, Kevin, and myself for the market update for November. Can't believe we're almost at Christmas. It's racing along. Markets in November were absolutely fantastic. I'm looking forward to what David and Kevin are going to tell you about it. The U.S. market, measured by the S&P 500, was up 8.9% in November, the best November for the index since 1980. The Canadian market, as measured by the S&P TSX, was up 7.46 in November. Global stocks, as measured by the MSCI World Index, were up a little over 6% in November. And the bond market also had a strong showing in November. The FTSE Canada Bond Universe Index was up 4.51% in November after bond yields decreased substantially over the month. So all in all, just absolutely fantastic news. As always, if you have any questions, need anything, please don't hesitate to give us a call. Off to the guys.
David, what was happening in the U.S. economy in November?
Well, we saw a lot of signs indicating that inflationary pressures are starting to ease in the United States. The Federal Reserve's preferred gauge for inflation, the Personal Consumption Expenditure Index, PCE, moderated in October down to 3%, which is the lowest level since March 2021. Economists were expecting a 3.1% rate in October. We ended up getting 3%. And the month prior was 3.4%. So we're definitely seeing signs that inflation is continuing to moderate in the world's largest economy, the United States, which is a good thing. We also saw that personal spending in the U.S. Was up 0.2% in October, which is a slowing from the rate that we saw back in September of 0.7%. So although consumer spending in the United States is still continuing to grow a little bit, which just shows that the economy is still growing in the United States a little bit, it is beginning to moderate. It's not growing at the pace that it was a few months ago, certainly 6 or 9 months ago. It's moderated from that level. And so it's a good thing for the markets. That's why the markets cheered this news in November, and why the stock market was up so dramatically was that the two main concerns, primarily inflation, is beginning to improve. And while the economy is still growing a little bit in the United States, it is beginning to moderate, which is also a good sign for inflation beginning to ease, and therefore maybe interest rates are done going up as well in the United States. Kevin, what was happening in the Canadian economy last month?
In the third quarter, we saw Canada's GDP shrink by 1.1% annualized. We saw muted consumer spending as the tight financial conditions continue to weigh on Canadian households. Exports fell considerably, dragging down overall growth, and there was a significant drop in the shipments of energy throughout the quarter. Now, Canada's labour market does remain a significant source of strength for the Canadian economy, even though it has been moderated over the last couple of months. We did see just shy of 25,000 jobs added to the Canadian economy in November. However, we also saw unemployment rise to 5.8%, the highest it's been since the beginning of 2022. Now, these developments within the Canadian economy indicate that the Bank of Canada is likely done with their rate hikes, that the hikes that we have seen already come are having the designed outcome, and that if we continue to see negative data come into the Canadian economy, we may see rate cuts sooner in 2024 than originally expected.
The sharp positive recovery for stock markets and bond markets in November is just the most recent example of how quickly markets can price in changing fundamentals. If we go back 2 months ago to September, when stock markets sold off a little bit, at that point in September, the economy seemed to be just too strong. And because of that strength in the economy, people were worried that inflation would remain very sticky or maybe even tick back up again. And if that were to happen, that central banks would have to continue raising rates, which wouldn't be good for stock markets and assets. Now, fast forward to this past month in November, and the situation has changed. We're starting to see the economy beginning to slow down, especially here in Canada. But even in the US, things are moderating as well. Growth has slowed, consumer spending has slowed in both countries, unemployment is beginning to tick up, certainly in Canada. And so we're starting to see signs that Inflation is probably well in hand at this point. It continues to drop, and therefore the markets in November are now pricing in that more than likely the Bank of Canada and the U.S. Federal Reserve are done hiking rates, and they're beginning to move forward their expectation from maybe the end of 2024 to maybe the middle of next year that rate cuts may come into the marketplace. And that's why the stock market and bond markets were repriced significantly higher, and we saw that positive momentum in November.
Volatility is still going to be a big part of the stock market over the next year as the market tries to figure out where we're going with interest rates and inflation. But the past month is a great example that if we are able to tune out the short-term noise, like we saw in September and October with negative months and then November being a positive month, if we can tune that out and stay invested over the long term, we are going to see positive results in our investments.
As always, if you guys have any questions with your portfolio or your financial planning, please don't hesitate to reach out to Kevin, myself, or Harry.
Take care.